As oil continues to fall, we look around the world for the implications of this disaster. And today we will discuss how the oil plunge is killing Canada. You came here for the truth, so let me unveil that for you. Let's get into this New York Times article, Oil Prices Fall to Lowest Since 2009. And this is a picture of North Dakota, it happens to be. But essentially, we look at the prices that have been falling significantly for many months, and we'll get into the charts right now. This is the NASDAQ, but you could see this anywhere, where crude oil has been in practically a straight line downward for approximately, since the summer here. So we're looking at this being in a decline and almost basically an inverse relationship to the stock market. And that really doesn't always occur in history. So we have a situation that is really defying the odds right here. The price seems to be declining in such a rapid pace, as well as a direct trajectory. It doesn't seem to be stopping anytime soon. I'll get into the reason why I believe that this could change. If that doesn't occur, we're not going to have a change. It's going to continue to slide. So let's move on right here. This article is basically talking about the Canadian dollar that's suffering. We have an economy in Canada that is based on exports, largely based on exports, and that goes for not just Canada but many other countries. So when you have a situation like this where oil is in decline, all of the countries that export oil are obviously going to be in trouble. Canada's dollar and its benchmark stock exchange both sagged, each dragged lower by oil prices that keep sliding with no end in sight. And so we're heading towards an area where it really could go below $40 a barrel. They said, I think we're going to see plenty more volatility in the coming days as pressure mounts on oil producers to scale back production before prices get dangerously low. Saudi Arabia has already said there is no way they're going to scale back production. What they said is that they're worried that the other countries will cheat, because that's what's happened in the past. So they said this time we're not getting that. We are going to continue to do what we do, and that is pump oil. So unless they begin to scale back, and not just Saudi Arabia, but other countries scale back on their productions, we will see the price continue to slide. And that's just the way it's going to be. Now, there are many reasons why this is occurring. I've got into that in other videos. What I wanted to suggest to you today is that they suggest that it's really a glut that has occurred, and we have a global economic slowdown, and these are the two main reasons why. So if we really factor in this glut that they say that there is, perhaps that is real. Perhaps there is no shortage. Why does it happen all of a sudden, out of nowhere? It just began to decline. Prices were staying very steady around, just over $100 a barrel. And then within a 6-month period, we have a dramatic decline. It doesn't happen. A glut doesn't just form out of nowhere. So I really don't think this holds water. I think there is much more going on behind the scenes that we're not being told. This is the statistics for Canada here, and we see exports that are falling 3.5%, imports even are dropping 2.7%. Roughly half of the fall in exports was due to a decline in prices, which was, in turn, mostly due to the falling price of oil, a trend that will continue in future monthly trade figures. So even right there, out of Canada, the Canadian government, they're actually predicting the same situation to continue. If you look at the loonie, it is actually declined to 84 cents to the US dollar. It was only a few years ago where I remember that the Canadian dollar was 114 to the US dollar. But of course they say that exports are hurt because of that. But look at the US, how their industry, whatever's left of it, isn't necessarily worried about a rising dollar, because there are many other fundamentals that you need to worry about, not just the exchange rate, because many countries, for example, keep their dollars low on purpose. So it's not just that we need to factor in. We need to look at the deeper details as to why this is occurring. Let's move on right here. Something that I've talked about all the way back from in my book, and I've done videos on it multiple times. Look at this right here out of the Financial Post. Dutch bank reveals 7 reasons why Canada is in serious trouble, starting with a 63% overvalued housing market. This is an article that you can read for yourself. I'm not going to get into the details, but I wanted to talk about housing prices, because when you have a slowdown in housing prices in Canada, that is the only thing left holding it up. There is a large percentage of the population that is invested in real estate in one way or another. They are not as stretched as they were, for example, during the U.S. crisis that we had. But essentially, you're looking at a big problem where people are taking out equity from their homes. You're looking at individuals who are using the maximum amount of debt. They pay the insurance required, so they only need to put down a small amount on their homes. And of course, this is going to spell disaster in the future. We also have historically low interest rates that are keeping these homes in a increasing trend, but that has to decline at some point. Now, we will see the effects of this as oil begins to really put a damper on the Canadian economy. We're going to see the statistics right now, and if we look at that, we will notice that many factors are determining the housing starts and so on and so forth are showing a decline, or at least a real much of a cooling off in the Canadian housing market. That's, with a grain of salt here, because you need to realize, obviously, they have come up significantly over the past 2 decades. This is what I wrote about in my book. And I said that these are unsustainable prices. There is a disparity between the amount of money that we earn and the cost of housing. Look at any country around the world, any city around the world, and you take into account how much somebody earns versus how much a house costs. And you will see the disparity in certain countries. For 20 years prior to the year 2000, a home would cost about 3 to 4 times the annual median income in Canada. However, today, the prices are pushing up to as much as 11 times the annual median income. It's historically abnormal, it's absurd, and can only mean one thing, and that is a bubble. But if you look around, if you talk to real estate agents, if you talk to the general public, they will suggest that it is absolutely impossible for the housing market to decline. It just can't happen. When I suggest the fact that if interest rates increase just a little bit, there are people that are not going to be able to pay their mortgages. There will be foreclosures. They will consistently repeat that they will not increase the interest rates. Well, you only have so much leeway on interest rates. If you want to force them down, even though the market wants to push them up, you're going to have to print a lot of money to do so. That will increase the inflation rates and will hurt the savers, will also hurt the people in their pocketbooks directly. So this is really a big fight in between what the central banks are doing. We're going to move on right here, again, out of the Financial Post. Canadian oil producers are proving less resilient than their U.S. counterparts to plunging prices. Rigs searching for oil in Canada fell by 25 to 190 last week, the lowest on a seasonal basis since 2009. So not only are we moving to 2009 prices, but we're looking at the actual searching for oil being brought down to 2009 as well. So those are 2 separate indicators showing you a decline in oil itself as a commodity. So another thing that I wanted to suggest here was that Canada has very, very difficult oil to get out of the ground. It's not as easy as certain places, for example, in Saudi Arabia, where they can extract it from the ground at a much easier, get that crude oil that they need. In Canada, where they are at the oil sands, it is very difficult and therefore very expensive to get it out of the ground. So if the oil isn't at a higher price, it really isn't beneficial to get it out of the ground. They simply can't sell it. They may be able to hold on to it in hopes that it will achieve a higher price at a later date, but this is of course a very expensive gamble. So it is very interesting to see what will happen in the next few years. And this is the GDP, gross domestic product of Canada, and we can see over the past couple years, I'm showing from about 2011, I believe, all the way to present day, and you will see specifically that they are not moving anywhere. It's almost a straight line across, very stagnant here, and that is for many reasons, but we can see that they are not really booming at this point. Obviously, oil being just something that's happened in the recent past, but if you look beyond that, statistically, there's really no reason to think of any of these countries are doing well, because just because you look at a single indicator like the US stock market, it doesn't have any factor, doesn't have any basis on what is real. Now, this is the most important information I'm going to get to in this video. I have warned about this consistently, probably 100 times by now. It's about Venezuela, and what we're talking about is the protests that are erupting simply because of shortages. People in Venezuela, actually the protesters, were put in jail, and they were obviously committing a lot of crimes, and they said this: unrest over swelling lines for basic goods. What did I tell you about so many times before? For whatever reason it might be a food shortage that is legitimate. It might be because genetically modified crops, when you don't have the diversity in the crops, you could wipe out the entire crop all at once, and this is something that's very dangerous that no economist ever even thinks about, never mind talks about. But of course, I'll be bringing this up. And then you have situations where you could have very high inflation, you could have a hyperinflation, which will make the food unattainable for most people. And what about when the store shelves empty? What will you do? What if the government decides to ration certain things? They could implement price controls. All of these things have been done before in one city or another, one state, one province, one country. And these are things that you can look at historically at your own country and see that maybe they have instituted these at some point in the past. So it is not so far-fetched to think about this, that it could very well happen to you and come to your doorstep. They're talking about civil unrest. They're talking about rationing of basic goods. What will you do if this happens to you? You think, you know what, 10 years from now this could happen, I'll worry about it later. But people are buying all of these silly things. They're dumping their money into the stock market. They're not worried about the basic essentials. You need to prepare for yourself right here. The people in Venezuela know what 60+% inflation feels like, and they are not liking it. And the civil unrest is starting to brew. People are angry. The protests are there. And what is the result of that? The military and the militarized police taking the streets. And this is what will happen in major cities all around the world. It could happen for geopolitical reasons, it could happen for economic reasons, but regardless, it could very well happen. And just for that reason, you need to be prepared for yourself. And I recommend people take their money out of the banking system. Just leave in what you need for everyday things. You need to pay your bills. You need it for, the average thing, but don't keep any savings. If you have any savings, don't keep them in the banking system, because they could very well pull a bank holiday in on us and take everything that we have, or take at least a percentage. It is too risky. We cannot have this. You need to have some storable food in the house. Keep some cans, keep some bags of rice, keep the simple things that you can consume on a daily basis that will not really affect your pocketbook too much, and you can consume them all the time. It's nothing really dramatic to think about and would get you through a difficult time. There are many other things that you can do. I've covered them before, and I will definitely cover them again. I want to thank each and every one of you for all your support and the interest in the live Q&A session. Of course, we don't have to just ask me questions. It could be an open forum. We could do anything on there. It'll be just a trial. Let's just, go out and enjoy ourselves on that chat. I think it looks like, from what I've gathered so far, perhaps a Friday evening would be the best. But if you have any other suggestions, of course, let me know, and I'm definitely interested in and definitely open to what you guys have to say. Please let me know either on the comments over here or email me directly. As always, I'm trying to get back to your emails. There are just so many, they're pouring in, but I'm slowly getting through all of them. And also, of course, I try to get back to as many comments as I can, but it is becoming more and more difficult, which is exactly why I want to do a live Q&A session so I could just go through them quicker, and this will be much more beneficial, I believe, for everyone. So, in saying that, I will say, please give me a thumbs up if you found this informative, and of course, don't forget to become an insider. The Insiders is where I give out all my best intel for free. That is available at themoneygps.com. Scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.